Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
Let's take a look at some of the potential indices that trade at the ISE that you might be able to do this type of trade on. The ISE originally launched their foreign currency pairs, which is comparing the dollar to one of these foreign currencies. The original ones, if I recall, were the British pound, the euro, the yen, and I think it was must have been the Australian dollar. Is that right? Well, anyway, maybe it was the Canadian. I think it was the Canadian dollar actually. They've added several over the last couple of years, and you now have a whole list of them. The ones that are in yellow at the top, these are all foreign currency pair indices where the dollar is being compared to the foreign currency that's listed here, and they're all denominated in U.S. dollars. I like to trade currency pairs in U.S. dollars. I've traded well, I haven't traded every one of these, but I've traded several of these. I've traded the pound, I've traded the yen, I've traded the euro. I like them because they're denominated in dollars. I think in dollars because I'm American and I spend dollars. I understand things in terms of dollars. So it makes sense to me. That's why I like to use them. But in response to requests from people who like to do it the other way around, they've also launched on the bottom half in pink reverses, where they are denominated in the foreign currency. So instead of being how much does a dollar buy, it's how many dollars can I buy? And they have the reversal of the four listed on the bottom. If you map the pink ones on top of the yellow ones that correspond to them, they'll look exactly like a mirror image of each other. One's denominated in the dollar, one's denominated in the foreign currency. It's really not that important which of the two you trade, as long as you understand which currency it's denominated in and whichever one makes the most sense to you. So what I've got on the next few slides are some examples of vertical spreads on these specific indices. I just looked at all of them and I found some that fit well with the examples that I wanted to provide, and we'll take a look at them. So the first example here is I'm looking at a bullish spread, and I'm looking at the bullish spread on the AUX, which is the Australian dollar. So this is the AUX, it's the US dollar relative to the Australian dollar. And again, it's denominated in terms of the US dollar. Now, when I see this chart, and this is what it looks like, I can draw in support and resistance lines, which I've done here. I drew in the green line towards the bottom of the chart. You'll notice where I drew it in at. From my perspective, from what I know about technical analysis, that looks to be a support line to me. And the reason I say that is because you'll notice that several times in mid-October, several times in November and in early December, and then again in early January, this particular index came down right about to that level, which looks like it's just a little bit below 107, maybe about 107.60 or so. And each time it came down to that level, it had a tendency to turn around and head higher. So when you see that happen multiple times, that's where you draw in your support line. Now, I'm not here to teach you technical analysis, but if you know anything about technical analysis, you probably are familiar with what I'm talking about. So to me, that's a support line. So when I look at this chart and I see what's going on here, I see that several times it's moved higher after it got to that level. It's doing the exact same thing right now after its most recent bounce from that level here in early January. Now, granted, it's March, but I had to build this deck a couple of months ago to run it through compliance. So at the time that I built it, the Australian dollar index was moving higher from support. Now, several times, as you can see here in late December and also back in August and September, this particular index has been well above its current level of 110.10. So I decide that this looks like a good candidate for a bullish spread because I have the belief that it has the ability to go higher from where it's at based on my drawing of that support line and what's been going on. So how could I take advantage of that? Well, what I've got on here are two separate bullish spreads that you might be able to use as potential ways to capitalize on your belief that this index is heading higher. The first one is a very conservative trade The second one is a little bit more aggressive. Now, the charts we have at Schwab on our trading platform, StreetSmart Pro, don't show these beige and orange bars down at the bottom, but I drew those in to illustrate the type of visual aid that I like to create for myself to help me decide if, once I've decided I want to do this trade, if it really is a good idea or not. So let's take a look at the first one. This is an in-the-money debit call spread. And the reason that it's in the money is because of the two strike prices that I've chosen. I've chosen the February 107 calls to buy and the February 110 calls to sell. Now, the index is currently at 110.10, which means both of these strike prices, the one I'm buying and the one I'm selling, are already in the money. That's why this is an in-the-money spread, because both legs are already in the money. This is also a very conservative trade, or just a slightly bullish or neutral trade. Because remember, when I do a debit spread, my goal is to have both options expire in the money. At the moment I'm entering this trade, they're both already in the money, which means this index does not have to go anywhere in order for me to hit my maximum profit at the end of the time frame, at the expiration for February. So how do you calculate where this index has to go in order for things to work out for you? Well, if you look at the prices of the spread, the leg I'm buying is costing me $4.29. The leg I'm selling is costing me $1.98. This is a 3-point spread, 107 on the buy leg, 110 on the sell leg. The debit of this trade is $2.31, which means that $2.31 is my maximum loss. Anytime you do a debit spread, the amount of the debit is the maximum loss that you can lose. So if I'm doing a 10 by 10, then my maximum loss here in terms of dollars is actually $2,310. Okay, it's $231 per spread, or $2,310, because my example here is a 10 by 10. Now, once I know the amount of my debit, and I know that this is a 3-point spread, I can easily calculate my maximum gain. It's the difference between the 3-point spread and the $231 that I'm paying, or 69 cents. So in this case, again, I've got $2,310 max loss. My maximum gain is going to be $690. Now, when I teach spreads, and I do a lot of seminars for a lot of clients, often one of the questions that comes up when I'm talking about spreads is, why would you be willing to risk $2,310 in order to make $690? It seems to me you're risking a lot more money than you're going to make. Well, that's true, but you don't evaluate the merits of a spread by comparing the max gain to the max loss. You're only getting half the picture if you do that. It's very important to think about the probability of the max gain relative to the probability of the max loss. In this example, the probability of hitting that max gain of 690 is significantly higher than the probability of hitting that max loss of 2,310. Why is that? Well, if I look down at the chart, you notice the orange bar that goes across at the bottom. That is the zone between which my spread will be from break even to max profit. This is a bullish spread. If this index is above the bottom of that orange zone at expiration, I will be profitable. If it's above the top of that orange bar, I'll be in my max profit zone, and anything above that orange bar is max profit.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.